The following content is an update and technical analysis on General Motors, a company of the consumer cyclical sector in auto manufacturers based upon the daily realm, where I had mentioned on the 16th of September 2023, we were trading spot price $34 a share, and we were rallying, fueling a nice clean rally right into what you would call dual price resistance correlated with this primary reactionary downtrend line and the 50 exponential moving average, called a dual line of resistance, offering an objective, great risk-reward ratio short trade setup to the downside, with a confluence of concealed, hidden, bearish divergence, RSI divergence here that had just continued to construct since February, at the beginning of the year there, on a potential re-challenging of the primary big reactionary uptrend line, called it multi-year price support based upon the July 2022 reactionary lows, and that would be the utmost level, key, inflection point, transitioning point for bull traders and or long traders to depend heavily at all cost. If not, watch for that clean, a daily solid red candle close breakdown sell signal below. And here's the update. And in the entirety of that trade, call it that 34 region, fueling up to the primary reactionary downtrend line and 50 exponential moving average, going on to not only do we break that primary reactionary uptrend line, we ended up backtesting that 3209 price resistance, went on to hit my first target, second target, had a counter trend rally, snapback rally, and went on to hit my third and fourth target. And the entirety of that trade was good for a 22.69% crash to the downside. And here we are hovering amongst big primary support level that really needs to be defended heavily, really at all costs, to potentially put in a positive RSI divergence, churning the oscillator and the moving averages a move to the upside, whereas the oscillator histogram just continues to print red candle closes below its zero line threshold as damage is being infused within the technical momentum indicator space. The bounces are starting, the counter trend and or snapback rallies are starting to get waned out of energy. No fuel or momentum. We never went on to even retest or re-challenge the 3080 price resistance correlated with the primary reactionary downtrend line. So the chops are getting smaller. That is a very bearish outlook for the price action in cadence and rhythm of the stock. Both GM and Ford completely retracted their earning forecast due to substantial losses incurred from the strike. I was getting a lot of heat from Tickles, the subscriber Tickles. I'm calling you out. Yet Ford disclosed a projected $1.3 billion cost, with GM estimated at $800 million in expenses. The bank, Wells Fargo, Colin Langan, stated that Stellantis is facing a weekly cost of $200 million during the strike. The 165% pay raise might seem lucrative, but it is a short-lived benefit. And I had continued to hype up the fundamentals behind the new vehicles, particularly the trucks. The linchpin of the Chrysler's business already start at a staggering $70,000 or more for a base model, and this high price point renders American-made cars or pickups unaffordable for many consumers. The vast peak affordability, buying a union auto worker car seems risky in the current scenario. There's a potential threat from lower cost producers poised to outcompete these established manufacturers, and that's when I believe the stock in general will start to waterfall, sell-off event, and a potential re-challenging. This is major, a multi-year price resistance, price support level, transitioning level, based upon even the reactionary highs amongst 2012, 13 region of reactionary lows right across that sphere in the 2016 era, cuts right through the COVID flash crash, through the gap. And again, this is the utmost, most pivotal inflection point for a bounce and or counter trend rally, really at all costs, to avert a potential exceeding more damage and infused destruction of the technical momentum indicator space. And I would only suspect a potential backfill, a complete crash, maybe even back down to 2469 price support. And then ultimately, if we take that level out, go on to re-challenge the minor 2295 price support, and then ultimately down to 1914. And then after that, you're going to go on to reflect and or consider re-challenging the all-time lows there off the COVID flash crash.